friends, this is Bitcoin Technical Analysis. I'm Rocky Outcrop and let's take a look at the charts together. As you can see, we have done a fantastic job of announcing in advance exactly what to be looking out for on the charts in order to capitalize on it and do well trading. I hope that you have got value from that and hit that subscribe button as a result and share these videos with your friends. I really, truly do. And let's just check in with that yet again. Well, we got the measured move, the Bulkowski textbook, style, encyclopedia of patterns style measured move up towards our target exactly twice, in fact. And then afterwards, we came all the way back down to the 21 EMA, like we said, is a possibility, of course, as well. And what is this? Oh, so close, close enough is close enough, let's say, in terms of this line all the way down here towards the lows, coming in today with lows of 11,165 on the CME charts here. So we'll take a look at the spot prices. We'll boil this down and reduce it down to a lovely jus, is that what they call it? A sauce, and see if we can extract any more value out of this as we get to the essence of the Bitcoin pricing at the minute. Thank you so much for tuning in. I've got this cup of tea, and tell you what, I'm just going to drink this wee cup of tea as I show you a video that I recorded earlier on specifically for this video. Here, you can see here. In fact, this is the sort of the starting thing. I saw this tree and I thought, whoa, look at that, look at the roots on it. Now, this isn't the only tree out there that's like that, as I say in the video coming up, but you can see as well, I've been suffering recently with midgie bites and stuff like that, and I've been bitten on the face a few times, so forgive me in this video where I kind of chat a little bit. 35 seconds gives me enough time to drink my tea. We'll dive back into the charts in just a second. So here I am. Take it away, Rocky. Okay. Shush now, Rocky. Shush. Shush. Ah, shush, shush, shush. Right, so you saw that there. Big tree, right? Big roots needed to be buttressing that tree up there. Do you see how remarkable that is? And indeed, that is a common sight around the world. And let's dive back over to the charts and ask the question, well, are these those exposed roots that are going to buttress up and move up towards the upper side? And has this been, therefore, in a sense, necessary? Or will we see further downside, and what would be the result? What would be the core reasoning behind something like that happening? Now, of course, we've gone through this in great detail recently, and we did talk about how this could be a shoulder over here. This could be a head over here. So the shoulder could be in there around about the 5th to 6th of August type of time. The head in there around about the 17th of August or so. And then coming in here on the 31st and 1st of September, could that be a right hand shoulder and bringing us down then towards where our neckline could be? And if we were to go on down past this zone, I think that it would be fair enough to say that perhaps is a measured move what we could look to would be a measured move off the back of this as a potential head and shoulder. So let's measure that out just now, and we'll keep using the CME charts as well, because we're going to have our eyes on the prize as well of this gap that's on the charts if we do come down to visit it. And where is that at the minute as well? That's right at the 144 exponential moving average. Let me just take a trend line then here to make a measurement off the back of this, and let's call it something like that, and then pop it down here to where we find the neckline potentially to be, and see that you could indeed, if you were to get the full whack of that move, go all the way down to there. Now, of course, if you got a 60% odd move down the way, then maybe you wouldn't be filling that in. Maybe this could be filled in a wick sort of a format that gets, the body's closing back up here, and maybe that could happen in the future. Now, forewarned is forearmed, as we like to say on the channel. So you know this could be the case now, just as you knew all of this could have been the case. And I have to say, quite a lot of people have managed to improve their trading accounts off the back of this technical analysis recently. And that makes me feel quite happy and satisfied as a human being. But you may want to, in fact, share it with your friends and introduce them to the tree of knowledge. Now, of course, it's a sin, isn't it? A sin. When it was that's the metaphor, by the way, from the Bible. If you don't know, by the way, Adam and Eve, the apple came from the tree, and that tree was the tree of knowledge, and the apple therefore being that forbidden fruit, of sort of skepticism and whatever. And well, if you want to eat it, then I have some apples here that are lovely. Let's take a look at some more of them. Let's just dive over to the spot prices and see how this has really panned out in accordance to the technical analysis. I can't help but laugh, right? I can't, because the technical analysis is just too good on this channel. Let me just dive over real quick to the videos. Look at this here, Bitcoin. 37 views, baby. All right. So if you're watching this video right now, just be aware that you're part of a very, very, very elite crowd of people who get to know who get to know all of this stuff happening in advance. And of course, we don't determine the market and how it's going with just, all 37 of us. Bearing in mind as well that one of these views is, of course, me, myself. So 36 people. Maybe in a sense, you've got my best ever performing Bitcoin video over here just a few days ago, or a couple of days ago, 208 views, 207 if you discount me on that one. But, as well, 80 views there. That was really quite impressive to me when I saw that coming up, because normally it's more like that at 41. So let's see what happens with this one. But of course, you know that you're being handed the keys to the kingdom. Congratulations. Welcome to the big time. Check it out then. What's happened with our technical analysis and how the prices actually performed in around these levels. And what do we see here? Well, the body is back up at this first profit-taking line towards the downside. And the wick came all the way down to close enough towards where this line was. Now I have this line drawn in here at 11,128. And the prices came all the way down or so. I mean, whatever, 11,130. Prices came all the way down today so far to 11,155, having been at a high of 11,956 up here, and just sticking its wick in, dipping its wick, if you like. That's a reference to making candles, I suppose. But dipping its wick into the golden pocket zone right here on this Fibonacci retracement before dipping down the way again, and finding that it is actually managing to so far find a degree of support in this area at the 236. This here is at 11,433. You can see the price is currently 11,449. So we're right in here amongst it, and we are actually finding some support currently. That is quite interesting to see on that basis, that's where we are. Now let's just put this into a little bit more context, shall we? And instead of having this going in wick to wick as it currently is, let's just see how that Fibonacci would look if we'd done it body to body instead. So the starting point for it there could have been, say, for instance, on this body, and the ending point for it, for instance, could have been over here on this body. Is that right? Actually, no, I've done it down the way. Sorry. The ending point could be on this body. There we go. Sorry, excuse me. It's recording these things live. You're liable to make the odd faux pas once in a while. So anyway, that was that. And you can see that the 618 is exactly, right here where these wicks have come in as well. So it's not dramatically different, of course, as you could have anticipated. So I'm just going to put it back wick to wick anyhow, because I normally prefer these to be wick to wick and just include all of the price action in the retraces. And, there we go. So that's where we've been. And what have we seen then happen as a result? Well, we identified the potential as well for, if I go down the time frames over here, 4-hour time frame, for instance, when we saw this bearish divergence coming in here on the MACD, that maybe we were looking at what could have potentially have been some sort of wedge formation here, and then the movement towards the downside. Of course, it kind of looked like that was being negated, of course, by this upward movement outside of the sort of rising wedge formation on the 4-hour time frame, and with this move towards the top side. But that's when we were also saying that you got to beware of, because this could then form ultimately a right hand shoulder, and where things could be going thereafter if we were to not push past these zones at the 12,000 point point, which we ultimately didn't actually achieve. And then we saw the prices dropping down the way. So have we had that measured move? And pointing over here, you can see there's this sort of measuring stick here, and you can see that we have indeed had that. So maybe things have kind of got to the point where they put out that buttress with all this erosion which has happened around the roots, exposing them like this. And maybe that's what we're looking at the minute. Now, I'm going to keep this episode fairly short and simple. We're 10 minutes into it already, so I don't feel like that. Like that, I want to go on for too much longer. Let's see if we can see anything else. Because look, my work here is done. In many senses, in that if you were able to if you've been watching the episodes over recently, then you would have been able to, for instance, got off on the back of a 7.7% move towards the downside there, for instance, and what can I do more? I mean, I'm spoon feeding it as it is. I really feel like, so I really need to cut down on these things. And I do appreciate though that this 10 minutes has mostly been going on about, well, where we've been. So let's take a look then and see. This high up here came in. It wasn't bearishly divergent, but we did speak about how this could have been a hidden bearish divergence high compared to the previous one if we were to have pushed up any further. And it seems like we didn't actually manage to create a hidden bearish divergence between those 2 points there and this downward trend. But you could have said then that we had a degree. We could have also said that we had a degree of hidden bullish divergence as well. And at this point here, if this was to be considered your low on the way up here, leading towards this upward move. Yeah, cool. Okay. I mean, ultimately, by the way, the start of the show really does cover everything off. I mean, I did already talk about where we could be going. And let's just underline that again for us. If this is a head and shoulders, they have a 60% chance of failing as a pattern. And what that means is that it could potentially, come down here, retest the neckline, perhaps. Maybe you could be flexible about where you put the neckline in on this thing here. But let's just say that this is exactly where the neckline is there at this 11,130 area that we spoke about already. Maybe there is going to be that, and if we were to move on past it, you're looking at these measured moves towards the downside, 60% chance of failure. Maybe that's a really good entry for a long. Now, if you did think to yourself, hey, I'm going to play this head and shoulders, I'm going to play within the pattern, I'm going to cash out at the neckline as well in terms of any shorts, and maybe even flip long at that point, then what you're looking at currently is that your position is in a solid 3% profit. No reason not to have your stop in profit at that point and make it a zero risk trade for you as well. So that's absolutely fantastic if you have longed it off the back of this. But we have a downward sloping 21 EMA now at this point here. It's coming in at this 50. Maybe we'll see these things cross. The 200 continues to go towards the top side. We came in here, tested it, and as well the 233 exponential moving average there. Lovely jubbly. And if we find support at these areas and manage to move back above the 50, things could be positive for us in the sense that we'd be maintaining this upward structure, having tested the 200 simple again. We've been speaking about the potential for a test of 200 simple for quite a while, ever since this crossover here, probably back then on the 27th of July, really, in terms of the 4-hour time frame. But we talk about it enough times that it certainly comes straight out of the Rocky Outcrop trading rule book there for you, and we've satisfied that. So if we do move back above the 50 simple moving average, then maybe there's some positivity to be had there. In terms of significant areas, we have moved past the 50% area on the RSI. We've come down here. We have gone in and almost achieved broken into the bearish control zone. On the way that I have it positioned on this chart, you'll notice that I have it from 35 as opposed to perhaps 40, where maybe you think of it yourself already. I've got it there. Maybe you have it from 30 anyway, maybe not. So maybe that's a bit further down. Mine's at 35. Okay, so that's just That's just how I roll. And maybe we're coming down here and get rejected off that on our first pass, and maybe that leads to the positive price action happening. But what I really want to focus on in terms of things in oscillators is the highly complex DMI. Now, be aware that I have a very, very, very good explanation on how to use this thing, minus the whole divergence chat. But if you read the comments down below, you'll see me explain that very easily on the channel. So check out the education playlist and find out for yourself exactly how this thing works in a way that nobody else bothers / knows how to explain on YouTube. Okay, some more of the keys to the kingdom. And what did we talk about really actually on the 24 hour, sorry, pardon me. What did we talk about with regards to this here yesterday when we were looking at them having crossed, what did we say? Can you remember? Are you one of that 36 people that watched yesterday's episode and knew about this as a possibility, that these had crossed and that this was actually down below the 20? Did I mention that? Was it specifically in this time frame? I'm sure I said it somewhere in yesterday's episode or the day before. I'm sure I said it, right? I'm sure I did. Anyway, as you can see here, we now have a cross above. Now, you could essentially say that we're in a sort of effective no trade zone at the moment, unless you're looking to trade the chop. We've got the EM negative moving up above the positive there, and they've crossed actually above the ADX line. I'm looking to see how this ADX kind of performs. Now, the ADX is not going to be just performing in isolation as the prices go static. Obviously that is an allegory for me saying that I'm looking for me to see how the price action itself is going to perform in and around these areas. And of course, at the minute during the 24-hour candles, you're looking at where exactly the wick and the bodies are going to be closing out on this thing with regards to our support and resistance on here, right? That's kind of the key takeaways for us right now. Other things that might be of note, which I've mentioned recently, were that we filled out all the gaps towards the top side on the 24-hour GBTC chart. And actually, if you want to point out anything of significant note here, the only real thing to be pointing out at the minute is that there are actually still currently gaps towards the downside here on this thing, which could ultimately end up being filled. Let's stick in a horizontal ray just to show us where the prices could come down to in terms of the GBTCs. I'll just move that over so it kind of encapsulates, or points to the exact candle that we're talking about. That's something to be aware of. Other things to be aware of are, for instance, the banana, moon, and stars. Where is it? Why is it not showing up? Oh, there it is. Why is it not showing up though? Is it on a really small time frame? Is it on a really big time frame? Where's my banana, moon, and stars? TradingView, why are you doing this to me? Look at that. Look at the mess. This was a really lovely banana, moon, and stars. If you were tuned into the channel, hit like if you like that crack. Anyway, that's kind of now historical. And yeah, so this is what we're looking to see play out. Not the Lisa N. Edwards completely inaccurate failure at trading. Definitely not somebody to follow on YouTube. No offense. Unless you just like lovely people with lovely personalities, which she is. She's totally lovely. For an Australian, eh? Only Australians would. I'm not racist towards Australians. Be very clear on that. Australians would understand that sense of humor. It's okay, right? It's okay what I did there. So she's a lovely lass for an Australian. Okay. And please, if you're Australian, qualify me saying that down below in the comments. And then, but otherwise, not worth following for technical analysis because it was complete rubbish. And what instead we're looking at here is whether or not this turns into a head and shoulders pattern. And if we're looking at this as a neckline, and that's really all it boils down to with regards to other things like, will we see this? And on this particular chart, you can see that the 21 EMA on the 24-hour time frame is below the 50. Over here on this one, you can see the 21's above the 50, and on this, it's above the 55 exponential, above that, and the 55 exponential below it there, and above it there. So there's differences in terms of the pricing across different markets, which is obviously very interesting to look to. It's actually above it there. Where was it below it? Struggling to find where it was below it now. Here. No, that's not the 55. I've confused myself. That's the VWAP. That's a VWAP. Look, the prices, by the way, currently you're trading now. If you bought it every single at the most commonly bought and sold points, I need to wrap up. Since the 11,180 price point there, then actually you're now below it. So if you were buying or selling at any of these times, since we came up towards these tops, if you started shorting it and just shorted it at the same time as every other person did it at the most volume driven points of the market of the day. Throughout all this period, then you would actually be in the green right now on average, which is kind of crazy, you might find. And indeed, that's where we find ourselves as well. Another thing that's worth pointing out, I actually thought earlier on, is this is maybe for some people the first real sort of conscious living through a head and shoulders playing out. Okay, so you now can see the psychology behind it, right? You can see how the psychology works and in and around these areas and why it's key. I hope you've learned something and really been able to solidify that knowledge in your head, because it's one thing looking at patterns, it's one thing talking about psychology and talking about moving averages and everything else. There's all these different things, but tying it all together and really understanding how it works is actually where your sort of bread and butter ultimately is going to exist, right? Okay, so now you've kind of lived through this experience yet again, at the top end of a market, and you now know, like on a big broad term framework, how this works in terms of psychology and how significant it was there to not really push past that 12k area. Now you understand and why we come back down here. Now, bear this in mind, we could move towards the top side, absolutely. Be looking here as well for the 12,145, and of course over here at the 11,900-ish area as terms of our resistance, and pushing past this 618, coming back into the purple area again and moving towards the top side. Of course, as well, our sort of key support area being down there at that 11,101 area where we have the 50 simple moving average. And look, okay, right. I'm going to end the episode now. I've hit too many home runs recently. This is a 20-minute episode. I suppose maybe in some ways it doesn't justify it. Looking at that downward slope, it does justify it. It does in so many ways. Oh my goodness, the technical analysis here. I'm going to have to stop blowing smoke up my own arse. I do have specifically a thread on the Discord. Do I have Discord open? No, I don't. I can't show you that at the minute. For doing that exact thing. If you want to sort of talk about how great you are, I've got a thread for that. Stay humble. But right here, looking at all this, how it ties together, the downward sloping trend line, talking about the swing failure, talking about how this could ultimately turn into being hidden bearish divergence. I have kind of made those points or whatever on the go there with regards to this. It's not actually hidden bearish divergence, is it? It has come up higher, so it's not got that on there, but it's also, whatever. Sorry for speaking over myself there, or sort of making a wee mistake there as I was speaking. It doesn't matter. Said it all very clearly in the past already. Right, okay. Home runs. Just excited about the fact that we've done really, really, really well. That's going to do. Okay, cool. I'm going to go on and look at the other episodes, the other coins for today. Thanks so much for tuning in. Catch you next time. Let's just have a wee quick look actually at this. By the way, another wee quick look here. Came down to 50 simple. If we go down below this 11,200 area, we're below the median line on this thing. That would obviously be spelling out for perhaps 10,900 as your next downward side target. Thereafter, it could be 10,440, 10,500, call it. And then you've got this 236 in here. If we actually go down there, that spells disaster in terms of so many people's trading accounts as well, because, ultimately that could lead to us going back down to 6,500, right? But if we move back up above this area before that we were at, just to put this into the context of the pitchfork, and thank you very much for staying tuned to the very end. You see that we come in here and touched it off the top. If we move past that upper warning line, then things are obviously quite bullish, and that would encapsulate a failed head and shoulder pattern, right? So don't say I didn't tell you exactly everything to look for, because that is it. And my God, another hole in one with our technical analysis. Thank you so much for tuning in. Really do appreciate it. To all 36 of you that are tuning in to watch this one. Hit the like button. Why not? Couldn't hurt, huh? See you next time.